Hello guys, a huge week has passed. In today's video, I will analyze Disney, Berkshire Hathaway, and Norwegian earnings report, and I will give you my expectations for next week's earnings report. If you enjoyed the content, please smash that like button and subscribe since it really helps my channel out. I know you notice I have a different background, and that is because I'm in Jacksonville visiting some family, but the content has to continue, right? Also, if you haven't signed for WeBull yet, make sure to do it and claim your 2 free stocks after depositing $100. One of those 2 stocks could be worth up to $1,400. Link is down below in the description. Now, let's start with the video. I just feel that we keep having an excellent trading week every single week. This past week, we saw the Dow Jones up 3.37%, which is huge. The S&P 500 1.91%, and it is getting to its all-time high again. Then the Nasdaq 1.5% up and just keeps getting over its all-time high every single day. It is impressive the bull market that we are currently in, and obviously I'm a little bit concerned about this because the economy is not at its best. The government's still trying to get on a deal for more stimulus. We're in the middle of a pandemic and the stock market just continues going up. What do you guys think is going to happen if we don't have more stimulus? People need money. There are still a huge amount of people unemployed, and not getting more help will worsen the economy, and I would think the stock market would react and can be really dangerous. My plan is to invest little by little just in case we don't get more stimulus and we see a sell-off. Now, last week we had huge companies reporting earnings, and I wanted to do a quick overview of some of them and give you my thoughts. I will analyze mainly companies that I either own or I'm invested in the industry. First, Disney. As expected, they reported a huge decrease in revenue of 42% in comparison to the same quarter last year, and a net loss of $4.72 billion. As you can see, most of their revenue comes from their media network segment, which includes cable networks and broadcasting. For their park segment, they saw 85% decrease, which was expected since they have been closed for almost the whole quarter. Then their only segment that had an increase in revenue was their direct-to-consumer and international segment, which includes Disney Plus, ESPN Plus, and all of those platforms that gives you direct contact to Disney. Last quarter, they reported 33.5 million paid subscribers for Disney Plus platform, and this quarter to 2020, or quarter 3 for Disney, they reported 57.5 million paid subscribers. And as of Monday, August 3rd, it reached 60.5 million subscribing, hitting their goal of 60 to 90 million subscriptions by 2024. That is a huge increase of almost 72% in a single quarter. They finally reached the 100 plus million paid subscriber in their direct-to-consumer and international segment. During their earnings call, Bob Chapek, Disney's CEO, announced their plans to launch a new entertainment streaming platform overseas in 2021 under their Star brand name. This platform will mainly offer content that they already own from ABC Studios, 20th Century, Fox Televisions, and more, since this platform will not carry licensed content. Apparently, it will be integrated into Disney Plus in many countries, but distributed under the Star brand. In my opinion, they have noticed how well their services segment has grown and want to increase it even more, since their parks and experience segment will be affected even more throughout the whole year. Next company is Berkshire Hathaway. If you already watched my last video talking about the stocks to buy in August, you already know that Berkshire is and has been in my watch list since May. And if you haven't, then I do recommend you go and watch that video after this one. I will link it down below in the description. Berkshire reported a revenue decrease, but a huge net income of $26.4 billion. On their balance sheet, we can see that they have $142.8 billion in cash, which has actually increased since last quarter, which, if you ask me, it's pretty impressive because they have been investing in different companies and they were still able to increase their cash position. When I said that they have been investing in different companies, it's because the almighty Warren Buffett actually invested $2.1 billion into Bank of America, which means that Berkshire Hathaway now owns 11.8% of Bank of America. Normally, any company that owned 10% or more of a bank would have to become a bank holding company, which includes a lot of filing and fees for the company. That is why sometimes you see Berkshire Hathaway trimming part of their positions in some banks because it might not be worth it to convert a bank holding company. In this case, Berkshire Hathaway applied to increase that 10%, and in April, the Federal Reserve Bank of Richmond approves Berkshire's application to boost its Bank of America stake as high as 24.9%. And then if it increases beyond 24.9%, then they would become a bank holding company. Basically, they are allowed to double their position from 11.8% to 24.9% without any problem, meaning that they might continue buying and buying more Bank of America stock in the coming months. Something might have definitely seen Warren Buffett in Bank of America stock, that he decided to go through the hassle of applying for that extension and then be able to increase their position without converting into a bank holding company. How big and powerful do you have to be able to make this type of things? That is really impressive. And also, Warren Buffett buys back record $5.1 billion in Berkshire stock, meaning that this is the most he has ever bought in history, surpassing his past record of $2.2 billion in 2019. Again, Warren Buffett is not a person that invests in overvalued stock, and if he is buying back Berkshire stocks, means that he's seeing it either at a perfect price or below their book value. Last but not least, Norwegian Earnings report. I want to start saying that I have never invested in this company, but I do have shares in Carnival Cruise Line and Royal Caribbean. So I like to analyze Norwegian since it is in the same industry and have an overview of how the cruises are doing. Norwegian was able to decrease their total cruise operations expenses by 68.5% compared to last year. But something that really concerned me about this company is their balance sheet. Yes, they have a total asset of $17.5 billion and total liabilities of $13.1 billion, which leaves us with a total liabilities to total asset ratio of 0.75, which is not good, but at least is below 1. The thing is that they have only available $2.26 billion in cash, and they had a net loss of $715 million, meaning that without any revenue, they will have to increase their capital by either diluting their shares or entering into more debt to be able to sustain until they are able to start full operations back again. But you guys know that I love the cruise line industry and have an open position in the two biggest cruise line companies. Obviously, it is going to be a rough year or even 2 years for them, but I'm willing to wait and see how they evolve. Now, next week we have another week full of earnings. We will see companies like Lyft, Tencent, Royal Caribbean, Nio, Mercado Libre, Inovio, and more. Quick reminder here, guys, I have a Discord group chat completely free, which the link is down below in the description for any of you that might be interested in joining. Now, for Lyft, I expect them to see a decrease in both revenue and income as it happened with Uber. But their decrease in revenue might be even bigger than Uber because Uber is a little bit more diversified with Uber Eats and has operations in 80 countries, while Lyft is only here in the US and Canada. Even though the economy started to open and people started to go back to work, the pandemic still limits people's travel and commuting. So yes, I do not expect to see any improvement for the quarter. Still, if you watch my last video, you already know that Lyft is one of my stock picks for August. So if you want to know more about it and why I decided to add this stock to the list, then go and check that video. Then Nio. They already gave us an update of their second quarter delivery numbers. They delivered 10,331 vehicles in the second quarter, which is a huge increase from last quarter and last year. Analysts are expecting them to have an increase of 134% in revenue, which makes completely sense since last year they delivered 3,989 vehicles and this year 10,331. That is 159% increase in deliveries. But take into consideration that that might be already priced in the stock. Lastly, Royal Caribbean. It is kind of odd that I give any kind of expectations for them since they are not fully operating, but what I think it will happen is that they will post a huge decrease in revenue and obviously a loss, but we'll like to see how they have been managing their available cash. Let me know in the comment section below what your thoughts and expectations are for Lyft, Royal Caribbean, and Nio. Hope you really enjoyed this video. Please smash that like button and subscribe since it really helps my channel out. If you have any suggestions for new stocks or new ETFs or anything that you would like me to analyze and give you guys my opinion. Also, let me know in the comment section below. Thank you and see you next time.